A simple interest bank loan alternative to a zero interest bank loan for equitable climate change investments or other government initiatives, including direct grants. In the ACT, we have a current scheme where the ACT government has contracted a supplier of loans to give interest-free loans to individual house owners to invest in equitable climate change measures. For those people who are not homeowners, then the government gives direct grants via the selected supplier to those households who do not own a dwelling or cannot obtain a loan. So the scheme is quite expensive for the government. We propose a simple interest loans to incentivise households to move to renewables. The government needs to contract with community banks to give local community companies or cooperatives simple interest loans to invest in equitable climate change measures. What will that look like? Well, we have a community group that gets loans from a bank, simple interest loans. They use those loans to purchase assets as approved by the government, the sorts of assets that the government allows them to get. Those assets are taken custody by individual occupiers of households. That's occupiers, not owners of the households. Over here, the occupiers of houses pays for electricity, or they might invest in more panels, separate to this here. This organisation here creates and distributes the shares, and from the payments and the investments, the shares are created, as are the shares created from the loans. The individual households and investors can buy and sell shares between each other, and a system is set up so that every month there are shares for sale and that there are shares being bought. Let's look in a bit more detail. So the advantages of the proposed scheme are that there's equal support to all households, so it's equitable. There is very little cost to the government except minimal administrative support. It uses modern monetary theory ideas to create the money, except banks continue to create money, government money, instead of governments. So governments hire banks to create money for them today, and they will do the same in this one, except that these ones are simple interest loans. The local community groups can support each member on investments, strengthening civil society and ensuring assets created with government money are in the custody of households, and also that the money is well spent. Community banks will make higher profits, and the communities will receive government money for the cost of the bank charges plus a profit. So a simple interest loan. All payments, including interest, are deducted from the amount owing. So the interest payments on a 5% loan over 20 years on $1,000 equals the initial capital of $1,000. So you pay for the initial capital plus 5% on the outstanding balance for the rest of the time. Compounding interest on interest is not used, and it's unnecessary, and it reduces the productivity of bank money creation. Simple interest pays for the money and bank costs and increases the rate that money circulates, making it far more productive. Local community ownership is important because most people have little experience in investing. Investing in climate change mitigation investments is even harder. The government can assist with the formation of local groups to collectively own assets while giving custody to users of the assets. The local groups can hire operators to do the investment for them and to control the investments. So the local groups don't have to do it, but there is a lot of local knowledge, and there are a lot of people who know a lot about solar and electric cars, etc. The existing assets that a person may hold, like solar panels or batteries, can be sold to the community, and the owners of those batteries effectively still own them, but someone takes over the responsibility of repairing them and keeping them going. All payments that are made become new investments and increase the number of shares. The shares are distributed, these new shares are distributed equitably to the members of the local group. This happens because the amount of money collected from electricity is greater than the amount of money that has to be paid back as interest. The implementation pretty straightforward. Existing interest-free loan members can form local groups and repay their loans with simple interest loans. Other groups can just form and use the system. Investors can increase their investments by buying more shares in the local organisation, and we expect that as time goes by, most investments will be local investments rather than the interest earning, rather than investments via the government and via these simple interest loans. Each month, investors must sell the same percentage of shares as the simple interest loans repayments to the bank. Occupiers will receive shares of value 50% of their electricity payments to the local group. And the local group members can buy and sell shares independently of the payments for electricity. So it's a pretty straightforward implementation strategy. Investing simplicity. Community consumers purchase shares and with their payments for electricity. 50% of the shares go to existing investors and 50% goes to the consumers. So that's how you do the investing. Every month, or whenever you feel like it, if you've got some shares, you can put them up for sale, and you can also be buying at any time if there are shares for sale. The market doesn't set the price of shares because the shares are always $1 shares. Each month, investors must sell the same percentage of shares as the simple interest loan payments to the bank, and that can be just set up to happen automatically. And the local group members buy and sell shares independently of the payments for electricity. Again, if you're in the business of investing, for example, you might like to put your pay into buying more shares. That can be done automatically, and the system just continue. So we suggest on introducing that the ACT government work with a community group. I can supply several community groups to do this, to negotiate with a community bank to give the group simple interest loans for energy saving or renewable energy infrastructure. And the government can quantify the benefits by comparing what's happening with other groups, well, not other groups, but with the current system where individuals are doing it. The government can just simply amalgamate the cost associated with a similar group and see the benefits that they're getting. And once they see the benefits, and as I expect it'll be, I would expect that the rollout will become quite rapid. Now, it's interesting that government grants can be done the same way, except that the total interest to be paid is less than the value of the loan. That's an agreement that the government comes to with the supplier of loans. But it's pretty straightforward, pretty easy to do, and it's just essentially the same. So just reiterate what's going on. We have a group of people, they get loans, simple interest loans. They use those loans to purchase assets. They also, down here, they also do the whole business of creating and distributing the shares. They pay the interest. They get paid for electricity that's consumed, and they get the investments coming in as well. They receive, the people here, the individuals in the groups, receive shares, and they can buy and sell between each other. And individuals, households, take custody of particular assets. So thank you. Contact me via Medium here or Substack here.